Shawn Beecher with us. Shawn, welcome to the George Jarkesy Show.
Hey, George. Good to be here.
Talking to me this morning as you were giving me the market update, pre-market as we got up first thing this morning, and you were telling me about things coming overnight, what was going on in Asia and Europe overnight, giving me a morning update. You were talking about the yen. Can you expand on that a little bit for our listeners and what's going on in the yen right now?
Absolutely, George. There's two real good plays right now in the foreign currency market. One of them is looking at buying. Now, what we do in the currency market is we have currency pairs. Any yen cross, there are some specific yen crosses that are better, but any yen cross right now is a great pair to be buying that yen because the Japanese economy and the Japanese currency is widely looked at as a safe haven amongst investors.
Okay, back up just a minute for our listeners. You've got the yen cross. When you say cross, explain what that means for our investors and for our listeners. This is a great
thing about currency trading is that you have a currency pair. So you have currencies that are pitted against each other. So you could be in the euro-yen cross or the U.S. dollar versus the yen or the New Zealand dollar versus the yen or even the pound dollar versus the yen. There are specific currency pairs that really lend themselves to big dramatic swings, and the nice thing is they're understood. They're predetermined swings, but some of these pairs, like the euro-yen cross, show immense profit potential. I was running some numbers before I jumped on here, about $25,000 worth of profit potential over the next couple of months on a roughly $2,000 investment.
Mm-hmm. Yeah, that's a dramatic increase, a tenfold increase on that kind of a trade.
Absolutely.
So why do you think, I've spent time there in Japan, and when you look at Japan and you're there, right, you first of all, you realize that the Japanese are a very concentrated people. They are, and I hate to blanket statement anybody, but I get the feeling when I meet Japanese management that they're very dedicated and they want to execute, and they march things forward rapidly, But when you look at Japan as a country, you look at what economically they're doing. Everything looks like it was built in the mid to late 1980s. You don't get the feeling that it's this, that they're still on the boom. You go across the water there into China, and you feel like that's the boom. Why do people feel like yen is a safe place to be?
Yeah, another good question. One of the things is that the Japanese economy was one of the first economies to enter into the global recession. So the natural assumption there is that they're going to be further along in the rebuilding process than anybody else. Combine the resilience that it showed last year after that devastating tsunami, and then the fact that Japanese investors own more foreign assets than foreign investors own Japanese assets. And what this does is this creates an immense surplus. And what it does is it really makes the Japanese the largest, and a lot of folks don't know this, but the largest creditor of any of the major countries. Japan, as of 2010, had a credit surplus of about $3 trillion U.S. dollars. The second closest would have been China, with only 2.2 out. So simply put, a play in Japan is actually a very well diversified play because they own so much in foreign assets. And the natural assumption is that they got into it first, so they should get out of it first.
Well, the other thing I can add to that is as you move around China, and I have for more than a decade, you see Japanese management there in finance and managerial roles where they come in, take an old Chinese plant and upgrade it and bring their management style to it and have more productivity and what have you in joint ventures and in other acquisitions and other things they do. So what you're saying about foreign investment, you see the Japanese all over China investing and bringing sort of their way of doing things, managerial style, to Chinese expansion. So I could see a lot of benefit in that, and if they bring that money home, a lot of benefit in that also.
Yeah, huge swings in that pair.
Yeah. So the other thing you were talking about Spanish bonds in this morning's market. Before pre-market, you and I were just discussing things. Talk to us about the Spanish bonds and what's going on there.
Here's another telltale sign at the volatility that's really being created in the market with all of the European concern. I looked just before we jumped on together, and most recent 10-year yield for a Spanish bond, 5.877%. Now, the real magic number here is anything 5.8 and up. The closer it gets to 6, and then even when it starts breaching 6, what you're really going to start noticing in the currency world is you're going to start noticing a sharp sell-off of currencies like the euro, and then this is where that buying into safer currencies like the yen really starts to take place.
Welcome back to the George Jarkesy Show. We're glad you stayed tuned in. Before we went to break, we had Shawn Beecher on, who's a senior market analyst at Market Traders Institute, and he was telling us the importance of why the Spanish bonds stay under 5.9. Shawn, can you continue that thought a little bit?
Yeah, and really what it is it's just a great current barometer for the amount of contagion risk that there is that may be spreading through Europe. Many investors are just paying attention to Spain in particular because that is believed to be the next shoe to drop. And the second those bond yields go into that 5.96% range, what it does is it's viewed as a very clear sign that contagion risk, that the overall concern that was created in Greece may be spreading through all of Europe.
Sure. Well, we've got a lot more to talk about because I was surprised at how subscribed the Italian bonds were this morning. So I'm looking forward to our segment Currency Matters on next week. Tell people a little bit about Market Traders Institute.
Market Traders Institute is the oldest foreign currency educational company anywhere in the world. What makes MTI so unique is that there are a lot of folks that are interested in trying to find a investment vehicle that gives you immense profit potential, limited risk, and the ability to really enjoy trading. And Market Traders Institute has found a way to take a market like the foreign currency market and combine all of the things that traders are looking for in an education with a market with immense profit potential. If you don't mind, I'd like to share a quick story with you.
Sure.
I had a client who came out, and I host a Facebook page. Anybody that's interested, you can look me up on Facebook. But I have a client who wrote a little poster. He says, I was attending the Phillies home opener on Monday at 1:05. I received your text regarding the pound yen. This is a currency pair that we've been widely watching at 1:24. I entered my short order on my cell phone at 1:29. I ended up playing a much better game than the Phillies as I scored 200 pips. Gotta love technology and Market Traders Institute too. When you translate that into dollars and cents, this client over a matter of about 3 hours, assuming that they only took a roughly $2,000 investment, made roughly $2,000 in profit in about 3 hours. That's the potential when combined with Market Traders Institute.
Yeah, that's fantastic. And the fact that he did it from his phone at the game, you guys have taken more than 100 years of experience in analytics and combined it into that firm, and that's what people are getting when they call into the Market Traders Institute, right?
Absolutely. I mean, the key is if you want to, make it analogistic to looking for gold, you can go out and you can kick rocks all day long, or you can take the time to invest in a map. That map is really where Market Traders Institute's success lies, and that's how we help clients.
All right. Now, you offer a free webinar, and you also offer the book, The 10 Keys to Successful Trading, for free. You can go to markettraders.com. The number there is 1-800-866-7